the time it takes just to figure out your budget, which nobody does, the time it takes just to analyze your spending habits, you can get a better return and you'll end up with more cash, knowing that even though I was paying for a lot of volatility, that I thought there would be a lot of swings in the market. And that's the whole thing. So what I did right now, I'd been going all the dividends and everything, I just put into cash. And so I don't think stocks have fallen enough to just to say any particular stocks are cheap. Right, so when I looked at the MLPs in 2008 and 9, they were paying 18, 19% for companies that had never missed a payment, right? Had always put out all their cash, and they looked dirt cheap. Now, you look at good companies, Apple hasn't fallen that much, and just to be down 10, 15% from their highs, they're still not as low as they were 18 months ago. And so what I did was, I said, there's going to be a lot of volatility. So I bought, took a little bit of money and bought out of the money calls, Standard & Poor's, the SP 500, and then I did the same thing on the diamonds, which is the Dow Jones. So I bought those long when the stock prices cratered, and then when we had the big, not today, but the big run up before, I bought a bunch of puts, knowing that even though I was paying for a lot of volatility, that I thought there would be a lot of swings in the market. And so you're just betting on volatility. I'm just betting on volatility.
And how long is that going to last, in your view?
No idea. And that's the whole thing, right? People aren't buying intrinsic value in companies anymore. The whole Warren Buffett approach works great for Warren because he can put $3 billion into an investment and take a whole different approach.
You said that portfolio balancing is a waste of time. So what are John and Sally Doe supposed to do?
Depends how much money you have, right? So the best way to get a return, let's just say you have $50,000 in cash. It could be 10, it could be 100, but let's use 50. First thing I would do is pay off all your credit cards, because that's costing you 18%. That's what John and Sally should do first. Most don't, right? There's more credit card and student loan debt relative to personal income than there's ever been in the history of the United States. Second thing you do is you use the transactional value of cash. A lot of people say, you're losing money to inflation when you just have cash in the bank. I completely disagree. I know I'm going to be buying a bunch of toothpaste for my family. I know toilet paper. I know all the consumables that I have. I can take my cash and go get a better value. I can take my cash and go buy service.
Store up?
Yeah, why not? I mean, how much space does toothpaste take, but you're going to spend. But that's the whole thing. And these guys who have hundreds of analysts who are working for them, why would you try to do better than them?
You can't win.
You can't. And now it's 100 times worse because of all the program trading.
But if you have enough money that you have to put some of it somewhere, to park some of it somewhere and hope to make a return on it, where do you put it?
What I do? I don't think you have to make a return on it, because I'd rather sleep well at night. I put it in cash, literally. Now, obviously, I'm in a different position where I don't have to live off of the interest paying me 1 basis point off of cash, right? But at the same time, having that dry powder, if you will, available when weeks like today or weeks like this week hit, and days like yesterday and today
and
happen,
you see an opportunity.
And you see an opportunity, then you're ready to take it, as opposed to saying, I can't get out, what am I going to do? And I'll tell you the other part that's better. We don't have anybody in government who can think big enough to impact trillions of anything, right? Historically, we're used to, 100 million here, 100 million there, pretty soon it all heads up and has an impact. But when you're dealing with 10 and 14 trillion dollar deficits, there's nothing they can come up with that's really going to have an impact. But you have to look at the blocking and tackling anyways. I wrote a blog saying that we need to get rid of business method process patents and software patents.
You're worried about patent trolls and
the
effect
patent trolls
that
are
has
killing
on
business. In my own business, there's always one coming up for ridiculous things that that the patent office granted a patent, and you can challenge it and you can fight it, but it's very expensive.
Do you really think that is a big effect on job creation?
Huge. And I'll tell you why. Because for any, particularly technology businesses or any industrial technology business now, there's unlimited uncertainty. You always hear people talking about the government, about the uncertainty of what's going to change, right? Well, with patent laws right now, there's so much litigation now that all my companies are getting hit, not once every 6 years, once or twice a year. And you don't know where it's coming from, and you don't know when it's going to happen, and you don't know how much it's going to cost you to defend, and you don't even know if you're going to end up taking a big hit.
So it makes you more cautious.
You have to be far more cautious, and you're paying more in insurance, increasing insurance rates, than even healthcare costs.
But you also, I think that's an interesting proposal. You wrote another column with a proposal that was much further out there, where you were suggesting that the government actually
invested.
invest money
Right.
in companies that will create jobs?
Right now, you know, when we talk about positioning or approach to creating jobs, we look at tax policy, right? And the conventional wisdom says that from the Democratic side, they said, if you spend a lot, the old Keynesian thing, if you spend a lot, you can create jobs. The problem there, and you can hire people, infrastructure, whatever. The problem is the government's very inefficient at implementing that. So even though, you know, for every dollar you're trying to create jobs with, you're only 70 cents, 75 cents is actually going to the infrastructure, and less than that's going to the job, right? And then you don't even know if jobs are actually being created. On the Republican side, they say just cut taxes, that money will go into, will end up creating jobs, when in reality, cash is not an inhibitor for most companies, and there's nothing that's historically that says that if you cut taxes, more jobs will be created, at least not with direct correlations, right? What I said was, look, rather than hoping something happens, let's ask for volunteers. You know, basically saying, if you have a company, and not a startup, but a company that's been in business 10 years, has, you know, I picked an arbitrary number, 100 million in sales, so you're a definable, easy to do due diligence on company. Tell us if you need money to create jobs, and we'll let you kind of bid in a Groupon type way on basically saying, you know what, for X amount of dollars, I can create X number of jobs. And then we'll just work our way down the bids. So if Alan's company comes in and says, you know what, for $12 million, I can create 100 jobs.
But do you really think the government could pull that off?
Well, I don't think the government itself. I think somebody outside of government. That's why I went on to say it's going to take a committee of nonpartisan people that have no, you know, it's going to be difficult to do, but because it's a completely different approach, you can take it outside the government, I think, and have it government funded from there. And the reason I said you can
still have the government essentially picking winners.
Well, yes.
It's venture capital. I mean,
well, in some respects it is venture capital, but compare it to what we're doing right now. Right now it's just scattershot and praying, right? We changed tax policy, two sides don't even agree what tax policy should be, and we just pray, right? We hope something happens. What I'm saying is, if you have an existing company and you're here to say that you're capital constrained and with capital you can create jobs, tell us about it, right? And we'll be able to do it. It accomplishes the same thing.
What was the response you got when you wrote that pretty far out there
Run for
proposal?
president, run for president, run for president.
You thinking of that?
No. And then on the other side was, you know, you were giving money to you were going into a public stock market that's readily exchanged, right?
Yeah.
So you're buying stock in broadcast.com and you're buying from somebody on a regular market. Whereas with today's technology VC bubble, you're going to this company, and I'm not trying to pick on Twitter, whether it's Facebook, whoever, right? And they're saying, okay, our valuation just went up $2 billion, and you're going to give us $500 million. Half of it's going to go to the VCs that got in before you, so they can cash out, and half of it's going to go, and a quarter of it's going to go to management, and a quarter of it will go to the company. And so you're laddering your way in, and the new money's paying off the old money.